In business today, three things to know. First, taming the bull market. Are inflation and high interest rates about to gore investors? Then, Game of Thrones in cyberspace shopping. How Amazon and Google are preparing for what looks like retail domination. And meet the sneaker pawn, a teenager who is doing to pricey sneakers what pawnbrokers have done for years to gold and jewelry. He's here. Arise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. Hope you had a nice 4th of July weekend. Put down the beer and burgers because it is time to get back to work. And for a week in the summer, there's quite a lot on the agenda for the markets. We start getting second quarter earnings news from Fortune 500 companies, and investors may be looking for better results following a slew of positive economic news, including the June unemployment report. They are also now on Fed watch, as some commentators are thinking that higher interest rates are coming quicker than expected. We're going to talk all about that with Jim Awad in a few minutes. With that said, there was a little movement, little news to move stocks today, so they drifted generally lower. Here are the closing numbers. Pulling back from record highs last week, the Dow Jones Industrial Average down 44.82 to 17,023. The S&P 500 pulling back 785. And the NASDAQ off by 36.40. Some of the stocks we're watching today. Global online travel booker Expedia says it has struck a deal to purchase Australia's Wotif.com for about $657 million. That will expand its presence in Asia-Pacific markets. Expedia closing down $1.36. AMC Theaters has a plan that it says will pack its cinemas. The nation's second largest chain says it's spending hundreds of millions of dollars to put in new lazy boy type of chairs that fully recline. Do you remember necking at the movies growing up? That's going to help that a little bit, I would think. AMC Entertainment closing down 56 cents. And King Digital, the makers of the popular game Candy Crush, finally went above its IPO price today of $22.50 a share after being upgraded by analysts to an overweight position. That's equivalent to an A+ rating for stocks when analysts get it right. They often don't. That was proved fortuitous here because King Candy closed down 5%. And gold, looking at commodities, closed at $13.19 an ounce, and oil back 58 cents to 103.48. Inflation, higher interest rates, not here yet, but maybe coming. Jim Awad is chairman of Plimsoll Market Capital, and he joins us now here. Jim, so we've come back from a long weekend. We came back from the Hamptons and the Cape and wherever else analysts and investors were hanging out. And all of a sudden, all the news this morning is now inflation and interest rates are coming. Why?
Well, it started on Friday with that Thursday, actually, with the employment number, which was stronger than expected. And the worry is that the economy is strengthening, and yet the Fed is remaining highly dovish. And the issue is, will the Fed get behind the curve to the point where all of a sudden inflation exceeds their expectations, and that therefore they have to start raising interest rates earlier than is anticipated and more frequently than is anticipated. And, of course, one of the reasons the markets have done so well is that you've had low interest rates for so long. So that would be a hurdle for equities.
And right now, are the markets anticipating interest rates remaining low for the remainder of 2014? And therefore, if there's a shock there, that could cause a sell-off?
Yes, the consensus is that the Fed will start raising interest rates in the second half of 2015. So to the extent,
a full year from now.
Yes, exactly. So of course, the markets are always forward-looking by about a year. So if there were any inclination or hint that it were going to happen sooner, then the worry is that not only is it going to happen sooner, but they're going to have to raise them more than they would think because all of a sudden the economy looks stronger than the Fed had been expecting. That's the worry.
No question, Janet Yellen in her recent speeches remains very dovish.
Yes.
Would you like to hear a less dovish tone from her? And would that possibly happen in the next couple of weeks anyway?
Well, you have the minutes coming out on Wednesday. And, of course, she gave a speech a few months ago at the Economic Club of New York where she was directly, pointedly asked that question about inflation. And she was pretty aggressive, saying she's not going to let inflation get out of control. And the markets took comfort from that. And the bond market started to act very well after that. Since then, she's been very dovish, increasingly at a time when the economy is doing better and better. So I think the markets would like to see the Fed minutes be a little bit less dovish and at least say that they're aware that inflation is creeping towards their 2% target, is almost there, and that they're at least aware of it.
Can there be real inflation, though, without wage pressure? We say that the jobs report was good, but there's still a bunch of bad news in the jobs report. A lot of part-time work, a lot of low-wage work, very minimal movement on wages.
Well, there are two schools of thought on that. There's the standard school, which is the one you just said, which is that with so much surplus labor, with slowing growth in China, with zero growth in Europe, that it's unlikely we're going to get inflation. There's another school of thought that says that there's a shortage of skilled laborers in this country, and that the areas experiencing highest growth can't get people, and that those wages are going to start to pull up wages, at least for those who are educated. So only time will tell. Now, we're in earnings season, and what you want to hear from companies next week, you want an economy that's growing enough for profits to grow to meet expectations, but not an economy that's going so strong that they're feeling margin pressures.
Margin pressures and pressure on labor.
Well, that would labor would be the most important part of the margin. So you want a sweet economy, sweet spot economy, which is what we've had to date, one that's growing but not too fast.
Is there a risk of disappointment, though, in the earnings? Because, like we've said at the open, we have a bunch of positive economic news, and now people are rethinking that earnings could be in the double-digit growth.
Right.
And do you think we're going to see that?
Well, you're right on that. That the expectations for the second half of the year are now up to double-digit earnings growth, and that's a little bit aggressive and maybe dangerous in terms of the equity markets. I think the 6% that's expected for the quarter that's just reporting is realistic. The economy got better, and that's realistic. But you really have to have an acceleration in economic activity from here to get double-digit growth in the second half of the year. And then, of course, if you do get double-digit growth, it might be with rising interest rates. So it gets very tricky.
And does the Fed look at the earnings? Is the Fed going to pay attention to the earnings news coming out?
I don't think they're going to pay attention to the earnings gains like Wall Street pays, but I think they're going to be paying attention to what the business community is saying about business. If they're saying it's accelerating, that it's getting stronger and stronger, they might then say, well, we have to extrapolate that to
If you're a
wage growth.
short-term investor right now, this is a little bit of a precarious time if you don't point your direction the right way, right? Because we're at record highs, and volume comes in a little bit lighter around this time of year, and things can move in any direction.
So therefore, you could be disappointed either earnings aren't strong enough or they are strong enough, they're too strong, and interest rates are going up. So what you want to do is absolutely go to quality in both equity and in fixed income markets, which we've touched on before.
Yes.
If interest rates start to go up, low quality debt will not trade well. So you might want to migrate to quality, stop speculating. You can continue to asset allocate into certain bonds and stocks, but err on the side of conservatism and quality.
Okay, Jimmy Awad, thank you so much.
My pleasure.
Coming up, what happens when the internet gods fight? You're watching Arise Exchange.
News can definitely be improved when reflecting diversity.
A lot of mainstream news, they don't dive into it.
Who wants to hear about negativity all the time?
They only show what they think people want to know and not what people really should know.
World-based stories. That's what I enjoy the most.
I think diversity of news is important to the world so that everybody will be aware of their surroundings and what is happening today.
Arise News, every culture, every angle.
I believe that people are watching news less today, definitely. I think that more so people are going online to catch their news.
We've numbed the human mind to murders and all these bad things. The content is a constant loop of the same stuff. So there needs to be, new content all the time.
Arise News, every culture, every angle.
Welcome back to Arise Exchange. It's a race to your front door between two titans of the web. Google and Amazon are fighting to dominate online shopping for just about every product and service. In the latest, Google announcing plans to invest $500 million in a same-day grocery delivery service called Google Shopping Express. That would compete with Amazon Fresh delivery service. With more on this rivalry is Ari Zoldan. He is CEO of Quantum LLC. Ari, welcome to Arise Exchange. Welcome back. What is Amazon and Google planning to do here? Because, we always thought of Google as a content company in that it's a search engine. Now it's very much pushing into the retail market. Why?
Right. Hey, Andrew, great to be here. So no one really knows why. I mean, Google is Google is great at search. They're great at producing and aggregating content, and Google should focus on that. Amazon is an online shopping cart, and they should focus on that. For Google to get into the express shopping space, to me, doesn't make any sense.
And is this really about continuing to own mind share on the internet then? If they figure they could grab a piece of this, that they want to hold on to it?
Yeah, I mean, everyone does, right? I mean, these companies, they're billion-dollar companies. If they could own the end user, either in the form of content creation or delivering spaghetti to their doorstep, then so be it. But I really believe that Amazon should continue focusing on its core mission of being a very big shopping cart, Google focusing on doing what they do amazing, and that's search.
Is there anything personal here? Because there's been reports that Sergey Brin and Jeff Bezos, the heads of those companies, have been sort of not liking each other. Is there any sort of personal vendetta going on here? Personal competition?
I don't think so. I mean, I would imagine. I mean, look, this is a huge ego. This is a huge ego play for both of them, and rightfully so. The two of them have built one of the greatest companies of the past 100 years. But I do think that both companies are spreading themselves out really, really too thin.
Yeah, you say that Amazon is one of the great companies in the past 100 years, and I think that's probably correct. But, there was a recent article that says Jeff Bezos is the prophet of the profitless company, that somehow this company never makes any money. Why?
Right. So I happen to agree with you. I mean, look, the company's been around for about 15 years. For a company that's been producing, somewhere north of $70 billion per year in the past few years, right? The margins, the net income is razor thin. But their mission, and Jeff Bezos' mission is, and he said it very early on, Andrew. He said, look, he's not interested today in creating large profits. He's interested in owning the customer. Versus Google, they've become a real cash machine. So I guess it's about management's goals and objectives. But long term, Andrew, I agree with you. I mean, the company's really got to start focusing on adding shareholder value.
And you talk about the core businesses of these two companies. Both companies are also really want to be media companies. They're in the content creation business now. Of course, Google has YouTube, and Amazon has Amazon Fire, competing against Netflix. Is that the right move for these companies?
Probably not. I mean, I'm a really big believer, as I mentioned earlier, Andrew, just companies staying to their true mission, to their focus, and putting everything behind that. Listen, you look at Facebook. They are, granted, they're trying other areas to become, to generate additional revenue. But in terms of, they're a social network. They're acquiring other social networks to add user base, like with the acquisition of WhatsApp.
Yeah, I think Facebook has a bigger challenge though, because it's really what's hot right now. And I could see them losing some of that customer base, while Amazon, is so widespread that you could buy so many different things from Amazon. I would think that the pressure is a little bit different for Amazon and for Google.
It is a little different, but Facebook has so much cash, because Amazon's sitting on a boatload of cash as well. But they should be focusing on gobbling up other companies in their space, not outside their space. So Facebook should continue to start snapping up other video creation companies or messenger sites so they could increase their user base. And the same thing with Amazon as a big shopping cart. They've got to focus on snapping up some smaller e-commerce companies to stay ahead of the game.
Okay, Ari Zoldan, CEO of Quantum LLC. Thank you.
My pleasure.
Time now for our business ticker stories making headlines across the nation. The Spanish telecom company GoWex, one of the brightest stars of the Madrid stock market, imploded over the weekend. The Wi-Fi firm that supplied wireless services to cities across the world was forced to declare bankruptcy after its CEO and founder admitted falsifying the company's accounts for at least the past 4 years. The fall from grace began last week when an investment firm released a report saying 90% of GoWex's revenue did not exist. Although GoWex vigorously denied the claims, the report wiped out over 60% of its shares over 2 days before the stock was suspended. The agricultural firm ADM is spending $3 billion for food flavors. Archer Daniels Midland is buying privately held Swiss company Wild Flavors, which supplies natural flavors and other ingredients to the food and beverage industry. The deal is expected to close by the end of the year. What did you do the 4th of July weekend? It probably wasn't going to see a movie. Sales at the box office were a horror show, down about 43% from last year, according to BuzzFeed. It was the lowest grossing 4th of July weekend since the 1980s. Topping the list of this lackluster weekend was Transformers: Age of Extinction. As expected, it came in first on its second weekend out with $55 million. Melissa McCarthy's Tammy underperformed big time with a debut of only $32 million over 5 days. And both the children's film Earth to Echo and the horror flick Deliver Us from Evil tanked with a dismal $15 million each. And Dubai is building the world's largest mall. The 8 million square foot Mall of the World, as it will be called, is part of a larger entertainment and hotel project that will include a theme park, theaters, medical tourism facilities, and 100 hotels and apartment buildings. The massive temperature-controlled complex will be connected and able to host 180 million visitors annually. No word on when the construction will be completed or how much it will cost. Women have been wearing Chanel No. 5 for 93 years, and by most accounts, it hasn't killed anyone. But the European Union, in a bid to protect people who may be allergic to its ingredients in this and other perfumes, has created new regulations that could snuff out one of the world's most iconic brands. A spokesperson for consumer policy at the European Commission had this to say.
You need to balance the health of consumers with the interests of the sector. This is why we are banning purely 3 elements, and for the others we are looking for a threshold at which people are not sensitized.
He probably does not use Chanel No. 5. So what would Coco do if she was still alive? Here to talk about the perfume ban is Darryl Doe, president of Delvia Doe Company, a manufacturer of niche boutique perfumes. Darryl, welcome to Arise Exchange, and thank you for coming in.
Thank you for having me on.
What is this about that they want to ban perfume after nearly 100 years?
Well, it's not so much banning perfume.
It's the ingredients.
It's requiring certain ingredients to be labeled as allergens, and also causing certain ingredients to be removed due to the amount that they have in the product. So they're causing products like Chanel to reformulate. These classic fragrances are now being tampered with as a result of these regulations.
Is this a problem at all? Do people have allergies that are serious? Is it about people who use the product, or is it about people who maybe are next to you and smell the product?
I'm not sure what the reasoning is for it, but if you know you're allergic to peanuts,
you don't eat
anything with peanuts.
Right.
There are certain ingredients that are naturally occurring, like citral, which is also in orange juice. Are they going to start to ban orange juice, where these products occur naturally in certain bergamots or citrus oils for the fragrance industry?
Now, you've been speaking to colleagues, I understand, overseas, who are very concerned about this.
Yes, because they think it's going to just totally change the creativity of the fragrance and flavor industry.
Well, you know, if you think about Chanel and you think about Coca-Cola, remember they changed their formula 20 plus years ago or so, and look at what happened there. You know, this is an iconic product, and they say that they want to comply, but it's going to be very challenging to do so because you want it to smell the same as Chanel No. 5 always smelled.
Well, they want to comply, but it's going to take some time to make these shifts in their formulations to make sure that they're the same quality and effect that they've had over the last several decades.
So what do you think is going to be the result here? Do you think that the EU is going to back off at all?
I don't think so. It seems like they've already made up their mind on what they want these fragrance brands to do. And I hope they don't go back to an EU version of a fragrance versus a U.S. version, in which case the U.S. version that don't have such
Is
guidelines.
that true? Has that existed before?
Well, it's happening now. The EU requires allergens to be listed on the back of the ingredient panel for the fragrances, where the U.S. does not. So that's definitely a disparity.
It's interesting that they have more restrictive regulations than we do right now over certain things.
Well, consumer products are only part of it.
How does this impact your business? Because I understand you do about 50% of your business overseas, correct?
Well, my customers always want to go into the European market, especially with a poor dollar. Then it becomes more attractive to the EU companies, stores. So certain stores that want to buy these U.S. products, the brands over here, they don't want to pony up the dollars because it becomes cost prohibitive for them to have a responsible party in the EU, all these extra testing that is required for these.
There's other luxury goods makers out there who have been pushing against this, and that says, that this is going to hurt jobs, it's going to hurt their business overall, and that the fact is, and I don't know what your experience is, that it's a small percentage of people who have these allergies.
I agree.
And that maybe this could be handled through education instead.
I don't think anyone's going to go into anaphylactic shock over this, but if you have a rash or you're allergic, again, just be careful or don't use it. But I don't think it's going to kill anyone, and these regulations are just, I think, overstepping.
Yeah, I mean, over 93 years, I haven't seen the body count add up over people using Chanel No. 5.
I'd like to see that.
All right. Darryl Doe, thank you so much for coming in and explaining this for us.
Thank you.
Ahead, you don't have to be smart or classy to host a talk show. Our favorite person of the day proves that. You're watching Arise Exchange.
One of the great things about Arise News, it is truly a multicultural global channel that is paying attention to communities of all different kinds, not just here in the United States, not just in Africa, but all around the world, as we're giving a voice to the people that don't traditionally have the kind of a voice that a mass media organization can have. You're getting here at Arise News that you're not going to find at the other networks is a unique perspective, and I think that's part of what Arise is here to do.
One of the great things about Arise Entertainment 360 is we have this Arise to Your Health segment, which really focuses on the holistic approach of being healthy. So we do everything from working out to juicing to getting in shape by doing fun exercises like bouncing on a trampoline or wearing these bouncy boots on our feet when we're jumping all over the set. We've done karate, we've danced the weight off, we've done just about everything. And of course, I love when we eat on set, but we do it in a very healthy and clean way.
Time now for our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. Today, it is one half of the national radio team of Opie and Anthony. Anthony Cumia, who was fired by Sirius XM satellite radio after a bizarre incident in a series of racist tweets. Cumia claims he was assaulted by a woman in Times Square while he was taking pictures and who allegedly punched him 5 times. Cumia responded by going on a hate-filled Twitter rant. In one tweet, he said, quote, "So I'm taking a pics in NYC and a black girl who was in the frame punched me in the face." He then called her names that we cannot repeat here. In another, he tweeted, quote, "It's a jungle out there in our cities after midnight. Violent savages own the streets. They all came to defend this pig." And in another, he says, "She's lucky he's not a white gun owner," or, quote, "she'd be dead." Well, that got him fired. There is now a bit of a backlash, however. About 9,000 fans have signed a petition saying Cumia shouldn't be fired by a radio station for exercising his First Amendment rights on July 4th, by the way. Still, Anthony Cumia is our favorite person of the day. Next, you've heard of the show Pawn Stars. Well, our next guest pawns sneakers. You're watching Arise Exchange.
Looking at mainstream news stations where only you have a very small minority of people of color being newscasters and actually having prominent roles in the media.
In a newsroom in the United States, maybe 10% of decision makers come from communities of diversity. That's not right.
Well, diversity is important because the more complete the news is, the more accurate a picture you're getting of the world, and the more you can form an accurate opinion of things.
The vision here is not just to tell the main stories of the day, but to tell the news that other organizations don't tell, and tell it in a way that people like me, people that look like me, that look like you, are interested in.
Arise News.
Arise News.
Arise News.
Arise News.
Arise News, every culture, every angle.
I think news does make people put things in black and white terms, just so that they have a dividing line between what their viewers like and dislike.
When they like see a person with color, they either think that they're not going to do anything, they're either on drugs or they got pregnant at an early age, and I just want to say that that's not true.
It tends to reflect more the interests of the upper income people and the upper income interests.
Arise News, every culture, every angle.
A young man who is breaking ground with a revolutionary idea. Our next guest is on the Arise, part of our new segment here. Everyone loves a pair of new sneakers. Depending on where you're from, you can buy Michael Jordan and Kanye West, just two of the many celebrities who've cashed in on the world's obsession with fresh kicks. While luxury brands may have made high-end sneakers to line their shelves, Chase Reed found a novel way to line his store with luxury shoes with the profits going right into his pockets. Chase is the founder and owner of Sneaker Pawn, the world's first sneaker pawn shop. Welcome to Arise Xchange. I understand school is over now for the summer, right?
Yes.
So you had a little time to come over here and talk with us. Yes. I appreciate it. You've been getting a lot of press on this. It's a super cool idea. Tell us a little bit about what the business is.
Well, basically, you can come into the store, and it's a sneaker environment. So it's a society where anybody can come from, any age, any race, everything. So you can come in, and you can basically come in. You can customize your sneakers, refurbish. We buy, sell, and most of all, we come in and you get to pawn your sneakers. So basically, with the pawning, you have 90 days, and each month you just pay a $20 storage fee. And usually when you want to pawn your sneakers, it's for somebody that wants to keep their sneakers, however, just needs the money for them.
And what makes this work is sneakers are hundreds and hundreds of dollars these days, right? Tell us a little bit about the different kind of sneakers and how much they can go for.
Well, the sneakers basically go for above $200, because most of them are retail at $180. So most of the sneakers in the store would, of course, be at $200 and above, being that we're a secondary store. And it's just millions of people that would pay that price, because the sneakers are so rare. Yeah, the sneakers are rare, and it's so unique.
I remember when Michael Jordan came out with sneakers, I think that was the first one that sort of broke through the $200 mark.
I think Michael Jordan actually created the sneaker game, and Nike's definitely building off of it right now.
So when people come in and pawn their sneakers, what do they wear out?
Well, of course, they wear their, they usually come in, pawn their best, and they walk out, and hoping that they have the money to come back for it, and most 90% of people come back for their sneakers.
And then if they don't come back, you get to turn around and sell them.
Yes.
And I understand you had quite the sneaker collection yourself, and your folks kind of gave you an option of what you can do with them, right?
Yes. So basically, my father, I had a big sneaker collection. I was actually spoiled for a minute, and then I started reselling sneakers on my own. And it was basically like, well, would you like to open up a store, or would you just like to have a sneaker collection and be a regular sneakerhead? And of course, I gave up my whole collection just so I can chase my dream in sneakers.
Did you want to always open up a store, or did you find yourself entrepreneur?
Well, whether it was clothes, because I designed my own clothes, so whether it was clothes or whether it was sneakers, I just had a passion for both. So it was like, well, why not just open up one big store?
So you're in school, obviously, and that's your primary focus. How do you run the store and also go to school?
Well, of course, you go to school first. School comes before, and in my house.
Taught the right things to say.
Yeah. No, yeah, definitely. With my mom and my father, school comes first. So, of course, you go to school, and then right after school, if there's any extra help, you stay for that. But then after that, come to the store and work.
Tell us a little bit about your parents' involvement in this, because obviously you couldn't really do this without them. They must be very supportive.
Definitely. Well, I have my father. He's my mentor every day. So he's there, making sure I'm there, and I'm on my business and on my job. And then, of course, I have my mom. She's basically like my manager, and she motivates me and she pushes me to make sure that I'm on track.
And how difficult was it to open the store? And did you have to get permits or anything? How did you pay the rent? How did you get all that done?
Well, of course, I have my father, so my father would pay the rent. But most of the work came from having the money from the sneaker collection, and then of course we had the store for almost a year and a few extra months. So it definitely was a struggle getting it open. A lot of people didn't see the vision of opening up a sneaker pawn. So when it actually did open, we were surprised that the public, reacted as well as they did. And it's been booming so lately. People come before hours and after hours, so that's definitely a good response. And it's becoming so big that we actually need another investor. The sneaker market and definitely the store is definitely blowing up right now.
So what's next for you? You have the sneaker pawn shop going, but what's next with the store and maybe with your future?
Well, of course, I would like to graduate from high school first and go on to graduate from college.
You go to Frederick Douglass Academy?
Yes. And, of course, I want to graduate and go to college and graduate from college. But most of all, you know, definitely I would like to open up and franchise to other states and other countries. So that's probably a big goal right now.
Okay, Chase Reed, the founder of Sneaker Pawn. Where is it located, by the way?
On 200 West 120th Street and Lennox Avenue.
Okay, Chase, thank you so much. Thanks for
you.
stopping by. And by the way, we have some of them there that we could maybe take a look at as we talk about. You know, just point out a couple there that are like hot numbers. We have about 20 seconds left.
Well, of course, we have the Jordan 7s. These are the original Olympic sneaker. So you have those, and then you have the Beijing 6s from, it's a tribute sneaker to when he played in the Olympics also. And then you have the cigars based on his championship. And you know, you have the crown jewel LeBrons, and those are the most expensive sneakers.
Those are the ones going. Those are the most expensive right now. Okay, Chase Reed, thank you so much.
Thank you.
Thanks for watching Arise Exchange. See you tomorrow. I'm Andrew Schmertz.